The trading week is clicking into gear. A flood of crucial corporate reports is accompanied by recession fears and the looming bank crisis. Fresh macroeconomic data is adding fuel to the fire. Still, some pieces are missing in the puzzle. With the InstaForex analysts, you will be able to clear up the picture. On Tuesday, the benchmark stock indexes closed to be the steepest losses in months. Stock investors are again unnerved about the US domestic banks. The Dow Jones closed by 344 points or 1.02%. The Nasdaq incurred the heaviest losses, having dropped by 1.98%. It has the sharpest fall since early March, and the S&P 500 decreased by 1.58% to close at 4,071 points. The New York pre-market looks promising. High-tech giants brightened market sentiment, so the major indexes recovered by 0.2 and 1.1%. The S&P 500 is expected to trade in the intraday corridor between 4,050 and 4,140 points. On Tuesday, Wall Street was discouraged by a pessimistic forecast by United Parcel Service. It worsened investors' fears about a slowdown in the US economy. UPS shares stumbled by 10%, the steepest intraday slump since July 2006, as the shipping services company forecast its annual revenue at the lower border of its previous target. General Motors shares fell by 4% after the company warned that price increases announced in 2022 would not ensure high revenue, even though the company upgraded its forecast for this year. The regional bank index declined by 3.9%, and the First Republic shares slumped by 49% to a record low level. Besides, the market is worried because the Consumer Confidence Index by the Confidence Board tumbled to the lowest level in 9 months. The benefactor of market optimism was a high-tech giants. Microsoft shares rebounded by 2.2% in the midday and grew by another 4.6% in the late session because their revenue surpassed the consensus. Likewise, shares of Alphabet, Google's parent company, rose by 4% after its revenue in the first quarter was beyond expectations thanks to high demand for cloud services. PepsiCo shares grew by 2.2% as the company upgraded forecast of the annual revenue and the profit. Today, the high-tech sector is propping up the recovery trend on Wall Street. Nasdaq futures are showing the strongest performance. Contracts on the Dow Jones and the S&P 500 are trading under pressure due to concern that the rate hikes will cripple the US economy. Microsoft shares jumped by 7.8% in the pre-market. Amazon, Datadog, and Snowflake, the cloud computing giant, rose by 2.9% and 7.1%. Refinitiv said that from the 124 companies in the S&P 500 that reported on their profits for the first quarter, 79% surpassed Wall Street forecasts. Commonly, 66% of the companies report better than expected results for a quarter. Profit forecasts were also upgraded, and now analysts expect a 3.9% contraction in profits in the first quarter for the S&P 500 companies, a milder decrease than a 5.2% drop projected at the beginning of the corporate season. Visa shares grew by 0.9% on the back of a higher-than-expected profits in the second quarter and the expectations of a steady growth in its payment business. PacWest Bancorp shares surged by 15% because the regional lending institution reported better-than-expected profits for the first quarter. Meta Platforms is due to report after the closing bell. Despite optimistic corporate reports, the high-tech sector is vulnerable to the fears about the banking sector, a recession, and the U.S. federal debt. As for the economic calendar, a decline in consumer sentiment was in contrast to the signs of a recovery in the U.S. housing market. Investors are bundle of nerves due to the thorny issue of the public debt ceiling, and Treasury Secretary Janet Yellen warned about an economic turmoil unless the debt ceiling is not lifted. The House of Representatives is going to vote today for the bill on sharp spending cuts for a decade in exchange for a short-term increase in the debt ceiling. It's unclear whether the bill will find solid support from the Republican majority. The fresh report today showed that the trade balance deficit contracted in March. The U.S. trade balance shrank by $84.6 billion in March, following a $92 billion deficit in February. The consensus was about a gap of $89 billion. Ag spreads grew by 2.9% on months, while imports went down by 1%. Retail inventories, excluding cars, expanded by 0.4% following a 0.1% decline in the previous months. The actual reading is a 0.1% uptick higher than the consensus. The currency market is also making sharp moves. The US dollar index has lost almost all gains of the previous session. At the moment of recording this video, the index pulled back to about 101.20 and 0.6% down. The intraday corridor for the index is seen between 100.8 and 101.7. The US dollar will hardly find support before Friday, when a series of macroeconomic data will be released. The Canadian dollar is licking its wounds after a painful fall on Tuesday, and the USD card pair is hovering at around 1.3620 with a slight downward bias. The currency pair is likely to trade in the intraday corridor between 1.3570 and 1.3650. The ongoing drop in oil prices does now allow the loonie to gain ground and benefit from the US dollar's weakness. Crude prices went down on a Wednesday, even though the American Petroleum Institute reported a drawdown in US oil inventories last week. Crude inventories in the US shrank by 6.1% million barrels last week, much steeper than expected. Government data will be available later today. Brent futures declined by 1.4% intraday to trade at $79.56 a barrel for the first time since March 31, and WTI slipped by 1.1% to trade at $79.15 a barrel. Investors regained pessimism, stoking fears that more rate hikes by major central banks could stem economic growth and dent energy demand in the United States, the UK, and the European Union. The crypto market is a bright spot among other financial assets. Bitcoin is enjoying its direct correlation to the high-tech sector, and the token approached the landmark level of 30,000, trading at 29,700, or 6.3% higher from yesterday. Popular altcoins reversed by the opening bell. Ethereum, Solana, Ripple, Litecoin, and Binance gained from a 1.2% to 5%. Bitcoin is unaffected by worries about sudden moves in the long-term inactive wallets, so the token managed to develop a rally. And now crypto investors are confident that Bitcoin will be able to test 30,000 and jump to 31,000 in the next few days. The market reckons that a looming credit crisis accompanied by the delayed effect of aggressive monetary tightening will push the US economy into recession in the second half of the year, and this will assure the US Fed to soften financial conditions to encourage economic growth. The challenge for Bitcoin will be the PCE price index, the Fed's preferable barometer of inflation. Besides, the US Central Bank will hold the policy meeting next week. The intraday outlook for the crypto suggests that the price might face an obstacle at $29,900. If this level is passed, the price could climb to $30,600. Otherwise, the token might retrace to $28,400. And we wish you good luck in your trading. Trade hassle-free with the InstaForex. And see you online tomorrow.